That's right. It's time to go global, and that's with Laddie Williams, who's coming from the night journey.
Yeah, the night journey last week. Good to see you again, Ini, on this side.
During the day, Laddie.
Exactly, in the daytime. All right, let's get a check on what to expect for the global market this week. Investors are bracing for a defining week in November, this trading month. There's two major earning reports and a long overdue September jobs data that returns to the spotlight. With a record-breaking U.S. Government shutdown finally over, markets are now laser-focused on the economic fallout and how fresh data could shape sentiment heading into the final stretch of the year. So for Monday, we have the New York Fed Empire Manufacturing data. The index for November, with activity expected to ease to 6.7 from 10.7 points in the previous reading. A key snapshot of how factory conditions are holding up as year-end approaches. Then for Tuesday, markets are watching for a fresh wave of U.S. indicators this week, from the ADP weekly employment numbers to November's home builder sentiment, expected to hold steady at 37 points. Now we see October's import price index, industrial production figures will also be in focus, offering investors a clearer read on consumer demand in the U.S. and also inflation pressures and overall economic momentum heading into the year. And that's for Tuesday, the ADP weekly employment data. Then for Wednesday, investors are gearing up for a data-heavy session as NVIDIA, they headline this week's earnings, while MBA mortgage applications, October housing starts, and building permits offer fresh insight into momentum of the U.S. housing markets. That's what we have coming up for Wednesday. That's what investors will be looking at in the U.S. Then attention turns to the labor market as investors await the latest initial jobless claims and the restored September non-farm payrolls report, which previously came in at 22,000. So investors are looking out for that. So I guess we can expect a volatile market this week. We also have PMI right there in the U.S. So a lot of data investors will be looking at, and we'll see how that drives sentiment in most of the asset classes that we track. All right, let's see news for today. Japan's economy, that shrank less than expected in the third quarter of 2025. We see the GDP data showed today as steady capital spending among businesses. That helped offset weak private consumption. GDP fell by 1.8% year-on-year in the September quarter, less than expectations for a drop of about 2.5%. But growth turned negative from a 2.3% increase in the prior quarter, which was also revised higher. That's what we have for in Japan right there. Then to the automobile industry, Chinese automaker Geely Automobile on Monday reported a 59% increase in third quarter net profit as vehicle sales surged amid intense competition in the Chinese market. The Hangzhou-based company's net profit rose 3.82 billion yuan. That's about $538.1 million from 2.4 billion yuan in the same period last year. Then we see Alibaba. They've launched the Qwen app in a public beta. That's the group launched the public beta of its new Qwen app. That was today, marking its strongest push yet into the consumer artificial intelligence market. The app is powered by the company's latest Qwen 3 model and is intended to bring its AI capabilities directly to everyday users. The Qwen app is now available for free in China on iOS, Android, and web and PC platforms. It will serve as the main consumer interface for the company's flagship Qwen series of models. That's right there for Alibaba. Then exports to the United States from India sank by 12% in September on an annualized basis, reflecting a spike in U.S. tariffs on goods sent out of a South Asian country, according to research from the Bank of American Securities. President Donald Trump placed additional levies on India's exported items earlier this year as part of a bid to put pressure on New Delhi over its purchases of Russian oil. See, that's still in the news there. Then to some big investor moves. Billionaire Peter Thiel exited his entire stake in artificial intelligence major NVIDIA. Filings showed over the weekend amid growing concerns over an AI-fueled bubble in technology valuations. Thiel sold some 537,000 shares in NVIDIA Corporation through the July-September period with a Form 13F filing from his Thiel macro fund showing that he no longer held any shares in NVIDIA as of September 30th. And it's quite interesting. We're looking out for their earnings later this week. We'll see if there's an impact there. Now we see Morgan Stanley, they've downgraded several major tech hardware giants, including Dell, HP Inc., and Hewlett-Packard Enterprise, as soaring memory costs and fading non-AI hardware demand. That squeezed margins across the sector. The bank warns that the industry is now deep in a memory supercycle, with NAND and DRAM prices surging as such as 300% in 6 months, a trend analysts say could pressure earnings well into 2026. Then for Bitcoin, we see the price slip below $94,000, hovering near a 6-month low as hopes for a Federal Reserve's rate cut. That's fading. Markets have trimmed expectations of easing in December amid a resilient U.S. labor market and delayed economic data releases. So definitely a lot to look out this week, and we'll give you more updates on what's playing out with most of the markets that we track. That's on Business Incorporated. So that's basically what's happening right there in the global space today.